And here we go. All right, so I want to go through three things today. The CFTC summary, which is straightforward, but it's straightforward. And then I want to go through an options position update, just touch on the options a little bit, and then I think we'll talk about the war, because a lot of you probably haven't seen this before, or at least seen it in this type of a market before, and it is something I have experience in, and I can, you know, answer questions rather than go through and give a diatribe on it. I'll just answer questions on it. So let's start with the CFTC summary. All right. I mean, if I sound clipped or more abrupt than usual, that's because we have a lot of people here and I'm trying to uh, navigate my way through it. All right, so here's the CFTC summary for the 5 days ending February 24th, February 18th through 24th. Jesus Christ. I have to figure out how to do this. Bear with me 1 second, guys. There's people still coming in. I'm trying to remove the waiting room. It's probably advanced.
Vince, I got an answer for you. Just look at the chat. I said in AI how to. It's in the participants, and then you just click on the user that you want to add.
Right. I think. Oh, I see it. Right. Right. Well, I'll take care of that. I rather just I don't want Iggy to have to go back and forth on this, so I'll just take care of it for myself for now, and then I'll let him be the host when I'm done, and then we can worry about it later on. Uh, yeah, that's the co-host feature. All right, good. So let's go. Let's finally go. Thank you. All right. Okay, so here we go. Here is the commitment of traders CFTC report. We're going to go through it. It's going to be pretty clean and pretty straightforward, and the banks are losing money. That's the moral of the story. So we have 5 days, up one, unchanged, up three, up four, and down. And during those 5 days, open interest went up, but not as much as you would normally think it would. Usually you'd see it to go up a lot more, and that's because in this rally you had banks covering shorts. Yeah, I'm 99% sure of that. On the first day, the market rallies and you have 3,000 lots of open interest increasing. On the second day, you have an unchanged day with the open interest nowhere, and that's consistent with it. The third day, open interest goes up by 6,600. On the fourth day, open interest, which is an up day, a big up day, open interest is unchanged. And on the fifth day, open interest is up by 3,000 lots, even though the market's down. So during these 5 days, it's basically a trend week higher, essentially a trend week higher, not actually. And you have the bullion banks covering shorts as the funds are buying. Now, are the funds buying a lot of futures last week? No, they weren't. They were buying a lot of calls. I'll show you what I mean by that. This is the commitment of traders. The top one is futures only, and the bottom one is futures and options combined. What you can see in the options and futures combined is that on the week, the swap dealers got shorter 2,700 contracts from shorting, and then they got short another 5,000 contracts from deltas. So they're short calls, which normally I would say that's something you can expect to happen, but not this big. This is really big for them. And who bought the calls last week? Well, managed money bought the calls, macro discretionary bought the calls, and the other seller of calls was the producers and end users. So on the week, you had the funds come in and buy a lot of options, but not a lot of futures. And I'll tell you the implications of that in a second. Let me get a cursor here. Yeah, there we go. All right. So here's your long managed money. They sold 1,700 futures on the week, but net ended up being long 2,000. That's because they all bought hedged calls. The long macro discretionary, zero futures. That's because they bought calls and didn't hedge them. All right. So managed money hedged calls. These guys didn't hedge calls. So now you've got 3,000, 4,000, 5,000, 6,000, almost 7,000 right here. and you've got 8,000 shorts, and there's your other 1,000 lots. So on the week, on the week, it went as you'd expected. Banks sold to funds and macro discretionary, which implies, as the post I put out from Goldman before, macro discretionary is back and they're buying, but they're renting. They're not really buying big yet. Now this could be at the very bottom, as Randy and I were talking about before. This could be at the very bottom of the open interest, so it could be the beginning of a big upswing. But right now, you have to say that they're sticking their toe in. They're not necessarily going all in. They're buying calls right now. Um, We've already looked at that. We've looked at that. So banks are short gamma, macro discretionary stepped in and bought options. End users are sold calls to them as well. Another person. So 67 people. Wow. Okay. I guess I should give people something for their money. So the bottom lines, banks are short gamma, big again. That's a bad thing. That means they're going to buy it higher. They will drive this market higher tomorrow. If they buy it tomorrow, they will drive it a lot higher. I'm not sure where we're going to come in, even though the market looks like it's going to come in at between 5340 and 5400. Mac Discretionary did not buy futures. Mac Discretionary, that's not necessarily a vote of confidence in this way. I would have liked to see them buy some futures as well, but I'm not unhappy with them buying the calls. It warns this is possibly a rental, and if no follow through, especially with oil up, could be a bearish week. Watch oil; it matters more this week. Oil is up about. It's not blockchain. Over the counter oil is trading up about 8 to 10%. So crude oil is trading probably $73 to $74 WTI, and Brent is trading about $80. So the spread's about $7 there. We know that banks are the weaker hands. Whether they wait for a dip or not could be a function of how scary oil is. So if oil makes the call tomorrow or tonight, if oil makes the call tonight and comes in stronger, then gold should come in stronger as well. If gold does not come in stronger with oil up, just be careful if you're speculating. All right. Any questions about that before I move to the options? I'll open my chat now so I can see what the hell's going on. Where'd the chat go? I'm better off answering questions today anyway.
Hey, I got one, Vince. How far out do you think the option players are going out for dates for contracts?
Yeah, I'm seeing a lot of it come into GLD, and what's happening is these guys are getting lifted in GLD, and they're trying to buy options here, and they can't. So I think I know that a big majority of it is under 90 days, and of that within that majority, those are under 30 days. I think a lot of the calls were being bought last week as a spec on the weekend, and it turned out to pay off. Does that answer your question?
Yeah, so the war is over in 30 days?
Exactly. But that's how they do it. Well, that's the thing. Macro discretionary hasn't been really active in metals lately. We can see by the open interest. And so what they're doing is they're trading everything. Let's say they're all trading oil right now. They're trading oil and they're like, oh shit, gold's going to move too. Let's buy some calls in gold and then go back to oil trading. That's probably what's going on right now. They're probably short Bitcoin, long oil, and looking to get long gold again, but they're not committed to gold like they usually are. They're probably, but on the other hand, this is the plus. If they're long oil and they're making money, then they will spend money on gold for fun.
Okay.
But they're all short dated calls. Are the calls they're buying options futures on Tony? Tony, are the calls they're buying futures options on the GC contract? Yeah, there's two types of options that they're buying. One is the straight up GC futures contract options that you see on the COMEX, and the other is something called a Clearport option, which is basically the over the counter version of the New York COMEX options. They're called lookalikes. So they clear OTC, they settle cash, but they trade with the futures. So you could see 10,000 options trade, and of those 10,000, 1,000 will be COMEX options, and the other 9,000 would be Clearport options. And Clearport is basically a COMEX option that settles cash. All right. When do we take profits in oil? Uh, I would, if you're long oil, Presley, I would take half tomorrow. Absolutely. Absolutely. Because it becomes a shit show tomorrow when this is part of the war discussion. But when oil is called higher, and by the way, I don't want to minimize this. You can't undo this oil thing. Okay? You can't undo what's going on. This is not something you can make go away. You have to deal with it. And I'll come back to that. All right. So do I believe it will transcend downtrend resistance line or not? That might tell you. Oh, Iggy's answering his question for him. Okay. Um, are those OTC trades ever shown on the tape? Yeah, they are. They are shown on the tape, Tony, but they're not shown on the tape until the end of the day. So you remember how we had the problem a week ago, or the obvious bullshit where the market dropped and then the volumes went up like 3 hours later. Do you remember that, Tony? All right. Well, I'm going to assume that he remembers it. All right, so there you go. Yes, yes. Well, that's that. Those are Clearport trades. They're probably not even called Clearport anymore. That's what I call them. Um, it's basically an over-the-counter trade that's traded person to person, and they submit the trade. We agree to the trade, and then we both put it in by hand. I mean, it's not by hand anymore, but you literally have to press a button to put it in. It's not automatic like you're on a screen. The trade is done. It's like I agree to the trade, you agree to the trade, and you hit the button, and it goes in. What, Tony?
Sorry, I accidentally unmuted myself, but this is a very good explanation, and thanks for calling it back to the last discussion because that clears it up perfectly.
Yeah. Well, what happens is it's very similar to the shenanigans that you see on Fridays when the open interest goes up by 10,000 and then on Monday it's down by 10,000 because they don't submit their trades in a timely fashion. So if you don't submit your trades in a timely fashion, intentionally or accidentally, the open interest will change, but very much after the fact when no one's looking anymore. It's kind of like a retraction on the next day. Um, if oil goes to triple digits, isn't that extremely bearish for miners? Yeah, Chris, it's bearish for miners, but not in the short term. Uh, I don't. Their AISC will go through the roof, but not right away. I mean, it's kind of like I mean, it depends on how the management handles it. Management may have bought contracts. Bigger firms, bigger miners probably have uh, covered their risk for energy going out the next 6 months with contracts. You follow? Smaller miners probably have not. So it's not bullish for miners that energy is going through the roof. On the other hand, it's going to be offset by people who just plow in. Look, if the market opens up the way it opens up in past wars of the three that I've been in, um, you're going to see miners go up as everything else goes down. Net net. Maybe they won't go up as much because oil's higher, but you have to understand the oil market. Chris, I'll give you a straight up answer. If you're looking at the oil curve, right? Here's the front month and here's the back month, right? The war starts and it goes like this. It does this. The front month goes up and people don't think the war is going to last long, so the other months don't move much. Now, as the war becomes more chronic, you start to see this. So in the beginning, it's spot and short dated futures are up. That's not going to affect the metals guys, right? But as time goes on, if the war is not resolved, you start to see this, and the whole curve comes up at the back end as well. So the front end keeps going up, and the back end catches up. So the immediate reaction to the war is you would be making a mistake to think that oil prices are going to go up, therefore miners are going to go down, because right now people think the war is short-term oriented. But as it becomes more chronic, it weighs on it. Hope that helps. Yeah, Scotty, it's not right. I used to play in Clearport. I was in Clearport. Clearport is a dark pool. That's exactly what it is. But it clears on the exchange, so you get to see it afterwards. Dark pools and Clearport have a lot in common. Will the market open? Yes. Yes, it will open. I mean, One of the things that the U.S. Is priding itself on is the fact that our market's open. If we don't open, I would view it as a disaster. To give you an idea, when 9/11 happened, we were open like 3 or 4 days later. So, I mean, the floor was opened. We were there. Like we were, 400 yards from the actually less than 400, 200 yards from the World Trade Center, and we went into work. Like I physically went into work after that. It was a point of pride that we would make markets as opposed to what's going on in China right now, where they may not even be making markets at all. So our marketplace has to open because that's a way of showing the outside world that we're stable. So, and if we don't open, Matt, if we don't open, that's really, really bad for the US because we're not getting bombed, right? We got bombed on 9/11 and we opened up a couple days later. We're not getting bombed. We should open up and we should project that stability. Um, are the calls they're buying futures options on the? Yeah, I answered that already, Tony. I'm not seeing huge movements in the options. They make me think anything big is happening. So okay, so Iggy's answering his question. Hartnett is recommending rotating out of stocks. Are miners included? No, they're not included. No, no, no. He's not recommending rotating out of stocks. I'm telling you what he's recommending, as opposed to what I think he's recommending. What he's recommending is out of tech and into value, out of tech and into cyclical, out of tech and into materials. If you're getting out of America, it's out of America and into miners in countries, not miners, but countries that have mines. Okay? All right. I think I got most of the questions there. Oh, Chris, did these 1,500, 15,000 and 20,000 calls? No, it doesn't mean that, Chris. I don't. There are three types of players that will do that trade. Now I'm not sure if somebody bought the 15,000 call and the 20,000 call, or they bought the 15,000, 20,000 call spread. I think it's a call spread. Now, let's assume that it is a call spread or someone piggybacking one buyer with another buyer. It's usually one of three types of players. One, it's somebody who's really big that I don't know what the hell they're doing, and that's rarely the case. Two, it's somebody who's a producer, believe it or not, a producer who's hedged their production but wants to have calls on their books so that they look like they have production, so they don't shortchange their investors. And number three, it's a big retail spec. I mean, a big. Don't get me wrong, it's a Saudi Arabian. These trades, these whales come in and they do these trades, and I think it's actually a silly trade to do. But what was the price that it traded? Do you know, Chris? Let's say it traded very cheap. I mean, it's 15,000 calls got to be worth a nickel. You know, um, yeah, Flim Flam.
All right, that was nice.
Okay. No, but when I bought one call, it was 10 bucks. Oh, you bought one, Chris? $10 meaning one tick, not a $10 call. Is that what you're saying? Okay, let me ask you a question. I want to get the terminology right. The option was 10 cents, right? You follow me? How? Right. A 15,000 call worth $10. How much for a 20,000 call? How much did you pay for one call? You spent $1,000? Okay. So it is a $10 call. How far out was that? Okay. So basically a 12-month call for $10. That's expensive. I'm not saying that you shouldn't buy it, but I'm saying that's expensive. Vol is pretty big back there. The fact that they bought a D's 26 call tells me it's very possibly producer based. Okay. Do you know what the $15 call, 15,000 call was? probably worth about $15. Anyway, what you should do is you should know that it's either a big speculative whale who doesn't know what they're doing and they want to just put something on and they have a lot of money to spend, or it's a producer that's actually buying a call out there because they've hedged their production. They want to have some legacy open interest on their books. And the third character is it's a macro discretionary hedge fund who made a shit ton of money and they're just putting that call spread on so they can walk away. Okay, so it's actually a lot more noise than signal that trade. Now, have I ever seen those go in the money? Yeah, I mean not that strike obviously, but have I ever seen stupid things like that happen before? Yeah, but usually it's at expiration, like we're 5 days to expiration, and someone says, "How's the 7,000 call?" and they buy them all at a tick, and then we go to $7,000 the day before expiration. So I have seen that before, but never with 1 year left. All right, Chris. I'm going to move to the options thing. Give you guys a refresher on what I have on, and we're not going to go into options too specifically, but I want to give everyone an update because we talked about this before. All
Sorry,
right.
Vince, just before you go to the option, you
Yeah.
mentioned something about if gold doesn't move and oil does, be careful. I just wanted you to maybe I missed what you were saying before that. I just wanted.
Yeah. Well, well, you missed the beginning, so let me.
Yeah,
If I
sorry.
don't if I don't talk, that's all right. No, I don't mean it any other way except to say this. Whatever I don't get to on the war now, we'll get to on the end. You see that? CFTC,
Yep.
options, and war. But I'll answer that question right now. And the answer is I'll answer it more in detail on the back end, but it's kind of like this. When there's a war, gold and oil move together. Gold and the dollar and oil all move up, right? Okay. When one cracks, the other cracks. Rarely do I see oil crack without gold cracking. So if oil comes back down, gold will crack. If if oil doesn't come back down, you want to be careful. I don't mean you want to be bearish gold. You want to be careful. Where will the dip be bought? Now that's me being as bearish as I can be. But look. I'll tell you a couple war stories on the back end, but I have seen gold be called limit up when we had limits and come in limit down. Okay? Because the government, I've seen oil be called $7 higher and open $7 lower as well during an Iraqi war. And that's because they got the Saudis to pump more oil than they actually said they were. So in the short term, the government doesn't want to have headlines that make the markets scared. And by the way, they're not really that worried about oil. They're worried about what stocks will do if oil spikes. They want to protect the stock market. So if oil is called higher, then the US government is on the phone with the Saudis saying, pump more oil. Now, that's not going to stop oil from going up, but it's going to stop oil from going up chronically. It'll spike, and then stabilize, right? But if they don't pump the oil, it'll spike, and then the whole thing will move. So the pumping of oil is like it's a lot of things, and they're all a sign of the Saudis and the US are cooperating with each other. If the Saudis and the US are cooperating with each other, then you shouldn't worry about oil. They're trying to signal to oil, to stocks, that oil is not going to be a problem. Does that help a little bit, Eduardo?
Yeah, I think so. Yeah, I'm sure you'll learn more at the back end of the chat. Thank you.
Yeah, and you can ask me the question a different way, and I'll muddle through it there. All right.
Thank
So on the options thing, where are we? There we are. All right. So this is a Condor. Now, some of you may not know what a Condor is, but I talked about it before. This was my position, and it's a little bit small, but the strikes are the 80 in the middle, 60, 80, 100 strikes, right? So that was my position in silver. All right. And I said to you, we were trading 70 when I put it on. Right. So we were trading, There's my drawing tool. Yeah. So we were trading, here's 60. We were trading 70 when I put it on. So I put on this trade here thinking that if the market stayed in this range, I'll make money. If it goes down, I lose money. If it goes up, I lose money. But as long as we're below 100, I make money. And that was my bullish neutral condor because the market was here. I think the market's going to go to 80 and stay at 80 for a while. Now, I wasn't married to it, but this is the type of structure that I'm very comfortable putting on because I'm good at massaging my structures. So I have this position on, and basically it says I'm bullish as long as we don't go above 100. All right. So do I think we're going to go above 100 tomorrow? No, because I think the market will be capped and then we'll have time to think about it because I think the market's going to be watched a little bit closer. So then as the market rallied and went to 80, I changed my position. So this is a ratio butterfly where I sold 3 put spreads and sold 1 call spread. So the whole butterfly condor, the whole condor is structured now so that if the market goes up, I will still make money or I will lose less money if it goes too high. Then that's me being prudent. That's me doing what I do, one of the things that I do well, and that's it. Now this is me getting greedy because I say, well, we really could go above 100, and I start lifting legs. So I'll tell you exactly what I did in a second. And now this is me today. The red line is me today. All right. So for those of you who understand condors, I'll give you the strikes. It's 50, 60, 100, 110. I'm short the 50, 60 put spread, and I'm short the 100, 110 call spread, and I collected money to put that on. Now, as the market rallies, I'm simplifying this, but this is what I did. As the market rallies, I start buying my 100 calls back. I don't care about the put spread. We're moving away from it. I'm making money on it. As the market rallies, I start buying my 100 calls back. As it rallies a little harder, I buy more 100 calls back. And as it gets to here, this is my max position. But now I want you to notice this. See this down here? This goes a lot lower now. So I lose a lot more money if it goes back down. Okay? So I'm not that completely comfortable with this position. So what's going to happen is as the market's right around here now. It's around 93. When the market gets up to here, I'm going to start taking these put spreads and closing them because they're all going to be worth a tick. They'll be worthless. So I don't want to have the exposure. When an option goes to a tick in value, people are still coming in. It's unbelievable. When an option's worth a tick in value, you want to close it. So
you sell them, right? So you sell them back so that you limit your risk downside.
yeah. I roll, or what I'll end up doing is I'll end up rolling my risk higher. So I limit my risk by covering the short leg. And then as the market rallies, my position will look like this. When I'm happy with my position, it'll be the green one. So see all these pictures here and how pretty the colors are? Only look at the white one and the green one. The white one is where we started. The green one is where I'll end. And I've taken the whole condor and I've moved it up. In a sense, it's like an inchworm. You have this condor here, and I'm lifting one leg up, and I'm moving forward. I'm dragging the whole thing down. So, organically speaking, that's what it looks like. Another person. All right. So that's the position right now. So the other question is, am I not bullish if I'm doing this? No, I'm bullish because what happened is when the market went to 80, I started buying SILJ. So I bought some 100 calls back, and then I bought SILJ. So I think miners are going to go to the fucking moon now, and that's what I think. As long as the oil doesn't do this thing where it stays up here forever. I mean, I don't think silver is going to get knocked down because there's really no more silver to pull out of the ground. It's all about what's above the ground that's being covered in the short. Any questions about this?
What's the difference between this and the butterfly that you mentioned? Because it's more pointy, the butterfly, right?
Yeah, let me draw it. All right, so that's a condor, right? And a butterfly would look like this. A butterfly would be same here. Do you see those? Do you see that line I drew?
Yeah. I was just wondering, like, when you will use one or the other.
Yeah, right. I'm going to explain that. I just want to make sure you literally saw this because I'm
Yeah,
using a drawing tool that I'm not sure how it renders. Okay, but you see basically the point, right?
yeah.
All right. So why don't we? I'll show you. I'll show you what it means. All right. This is the. I'll give you a way to look at every graph to come up with a working idea of what the hell is going on without being too stressed about it. If there's curvature or angles, that means there's open interest. So I'm long the 50 put. Just accept this as fact. I'm long the 50 put. I'm short the 60 put. I'm short the 100 call, and I'm long the 110 call. Are you with me on that so far, Eduardo?
Yeah.
Okay, good. Right. So what I want to make sure other people follow along as well, but you're with me, right? So when I put this trade on, I said I think the market's going to be between 60 and 100, right? You agree with that, right?
Yeah.
All right. So if I think the market's going to be between 60 and 100, but I'm not sure where it's going to be, I'll go with the Condor.
Okay.
If I think the market's going to be at 80, I'll go with the butterfly, and I'll take these two strikes that are 60 and 100, and I'll meld them at 80. And I'll take the flat top and make it a V.
Okay.
Okay? Wait. So why would I not do this all the time? Because I can make more money? Well, because you collect, you can make more money, but it costs more money
Hmm.
if you're wrong. Okay? So the condor is a plateau. I think the market's going to be between one knuckle and the other knuckle, right? And as long as it's in here, they'll pay me $1.50, right? Because I'm not being very precise. With the butterfly, they'll pay me $10 because it peaks a lot higher, but it slopes down a lot faster. You follow me?
Yeah, gotcha.
Your decision for everyone else here, your decision analysis when choosing between a condor or a butterfly is as follows. If you have an exact opinion where you think the market's going to go, pick the strike for the butterfly. If you want to give up some of that preciseness and make sure you're covered on the bigger area, a condor is kind of like a butterfly with some forgiveness in it. Okay? And
Yeah.
Plus, you're short at the ends, at the wings, as opposed to in the middle. Just for people who may not, right?
right. So what Randy's saying is like with my hands here, I'm short this put and I'm short that call, right? Okay. Now, if you make it go from flat, remember wherever there's an angle, that's where there's an option. There's no option at 80 right now. It's flat, right in the middle where my fingers are. Now, to Randy's point, if I make it a butterfly, I no longer trade the 60 put, I trade the 80 put. And if I make it a butterfly, I no longer trade the 110, the 100 call, I trade the 80 call. So the curvature exists. Wherever there's curvature or a bend in the road, that's where the options open interest is. So it was the 50, 60, 100, 110 condor. Now it's the 50, 80, 110 butterfly. The 80 strike becomes into play.
Yeah, makes sense. Thanks. Um, so I was gonna say, like, sometimes I'm not sure which expiry I choose. But
Right.
yeah, maybe I don't know, other
Well,
people.
the expiration is key for these, for me, because I start by saying, just organically, I say, well, I don't think the market's going to go anywhere for the next 30 days. And so I look at a 30-day butterfly. Maybe I'll go to a 90-day butterfly, but I only plan on keeping it on for 30 days. You follow, Ed?
Okay, so it's on the technical. You judge by
Yeah,
which.
yeah. A butterfly is all about the time. It is the time. It's all about the time. So it's like I think the reason I put it on is because the market had just gone to 120, got slammed, and then recuperated, and I identified buying at 7. And I said, okay, the buyer's back. Looks like we're going to stabilize here, but there's no way we're getting above 100 again. That's me talking, right? So what can I do to that? Do I buy a 70, 80 call spread? Yeah, I could do that. Do I sell 100, 110 call spread? Yeah, I could do that too. And so I did a combination of trades that said to me, I don't think it's going to go below 70 or 60, actually, is what I picked. And I don't think it's going to get above 100. So I said for the next 30 days, I'm going to do that. And I put this on with 30 days left. Now it's got 20 days left, really 15 to 20 days left. But the thing is, the more precise you are, the more money you can give back as you go to expiration. You follow? If I did a 90-day condor, my condor would look like this, but it would be lower. And as time would go on, it would go up and up and up and up. If I do a 10-day condor, it's up here, but it's going to move a lot quicker. You follow?
Yeah, I can't see your coloring changes anymore. I just see.
I took them off.
Okay, no worries. Yeah, okay,
Yeah.
okay. All right, no worries.
Yeah. I'm just using my hands there. All right, so let's move to the war. All right. Why don't we start with a couple anecdotal observations about the past and how it could play out. I'm not saying it will play out at all, but why don't we start with a couple anecdotal observations? 79 people. Well, this is the biggest one we've ever had. And hopefully I'll make it. Hopefully it's worthwhile. Uh, so let's pull a chart up. Is that my phone? Yeah, it is. All right. Okay. All right. That's silent now. All right. Oil up 15% at the moment, Matt. Where'd you get that? Is that IG Squawk?
It's IG weekend oil.
Yeah, yeah. IG is notoriously high, but they're right
Yeah.
directionally. Yeah, IG is like PAX, too high. You know, but the over the counter word is that it's up 10%. So maybe it's up 15% now. I don't know, but IG has been a little bit higher.
They've just jumped in the last sort of half an hour or so.
Oh, okay. So that makes sense. That makes sense. All right. So let's talk about Exxon for a second. You guys want to talk about oil companies? Oil companies will do fabulous. Fabulous. American oil companies should do very, very well. There's no, you know, I've been wrong before and I'm wrong many times, but there's no ifs, ands, or buts about it. These companies are vertically integrated. So they produce the oil, and the oil that they have isn't being threatened. The oil that someone else has is being threatened, and their oil is going to go up because of it. And on top of that, their gasoline that they sell is going to go up. So everything is going to go up. So yes, your major oil producers in the US should do very, very well because it's free money for them right now. Now, does it become a problem for oil producers? Well, no, not really. It doesn't ever become a problem for them because they're here and if oil goes up. Now, are they going to make money tomorrow from the oil going to $100? No. The oil producers, and this is who asked about the gold miners. Chris, I think it was. It's funny because as the oil market does this, the oil producers will discount the market going higher for longer. So oil does this and oil stocks go up. Oil does this and gold stocks go up. But as the war goes on longer, oil stocks keep climbing with the curve and gold stocks start dropping. You see that? The relationship? As the war becomes chronic, oil stocks will do even better and gold stocks will do even worse. Historically, that's how it goes. It doesn't always go that way, but that's fundamentals talking. That's not that's not like, technicals or some other shit. So I want to talk now about why oil is more important than gold for other than the obvious reasons. Oil is energy. I know everyone knows that. Oil is energy, and because it's used, it needs to constantly be replenished. Oil is a just-in-time commodity. And the strait doesn't have to be closed. The strait doesn't have to blow up. All you have to do is insurance costs have to go up, and oil goes up in price. I mean, if you're a crew person, I've talked to someone who talked to people on those boats. They're like, no, I don't want to go. I might die. They're basically just working guys working on ships. And they're like, I don't want to go in there. So the captain will say, fuck it, I refuse. I'm not going. You know? And can you blame them? Now, so what that does is it immediately makes all the oil that's out there, that's not in there, worth that much more. Okay, so oil that's in the strait can't get out. That's 20% of the oil in the world that comes out of there. Oil that's out of the strait on the seas, that oil goes up in price. Not to mention, if I own the tanker that has the oil in it that's out on the seas, I might tell it to stay out on the seas a little bit longer. They play that game all the time. They do that. And you know who does that? JP Morgan, Morgan Stanley, Vitol, BP. They will do that. They'll say, keep the tanker out there. Leave it in the fog. Don't let them see it yet. And basically, they're waiting for oil to come up. And when oil goes up in price, then they'll come into port and sell it. They're not going to sell it. I mean, that's literally what happens. It's literally um, uh, it's literally part of the game. So the Strait of Hormuz. I'll give you a little bit of history of this from my oil mentor, who was Peter Butel. For those of you who know Peter Butel, who he was probably the best oil analyst of the last 50 years. And Peter understood the strait better than anyone else. He understood that back then, before he died, back then, 20 years ago, he understood that Iran would never shut the strait because if they did, it would be suicide. It would They would lose their own oil revenues, number one, and number two, the Saudis would just kill them. The Saudis would be like, whatever you want to do, United States, do it to them. You know, so not to mention this is Peter talking. Not to mention that if the Saudis, if Iran ever blocked the Strait of Hormuz, we'd blow them to hell, and we're already blowing them to hell now. Um, uh, Yeah, Randy, does oil get shipped under contract or does it get a contract at sea? Some are shipped under contract, some are at sea. Some of them are basically freelance isn't the right word, but some of them basically say my contract is before I leave, my contract is when it pulls in. So some of them are like when you go to the pump, you pay, but they're constantly doing it. So it's kind of like I own a shipping company and I have 500 ships. My ships are constantly going in and out, so it smooths out over the long run,
Sure.
right? So we'll do free market price. We'll do price at spot. We'll do a price versus a Platts blend, a Platts index. All
Cool.
right.
Thanks.
Yeah. Uh, Reports are that Iran and other Middle East oil producers have parked about 7 days of world consumption in tankers off the coast of Asia. So that would supply China for some weeks. That makes sense, Britt. That makes sense. That's what I would do. China has probably been, ever since Venezuela, China has probably been saying we need to have as much oil available as we can. So you would think that would make everything okay, but it's not. That oil's spoken for. So China, that oil that's sitting offshore in Asia, that oil is spoken for by China. It's the guys. China took care of its risk. I mean, I'm not saying they took care of all of it, but they took care of a decent amount of it. And so in doing that, it's the other people who get screwed because they haven't taken care of their risk. It's the people at the margin who end up causing the problems. Dire Straits is my new favorite band. Right. Yeah, exactly, Julian. Yeah, like but here's the other thing. When I say they will not close the strait, I literally mean they will not say that they're going to close the strait. But the strait can get closed anyway. All you need is one sunken tanker, and you can close the strait. That's all you really need. Yeah, exactly, Paul. A crude vessel destined for China got through the strait without problems yesterday. Exactly. Now, I'll give you an idea of how important that is. Like everything is getting bombed to shit, but the strait is like the safe haven. Now, it's not safe, but it's the thing that basically military escort goes with them as they go through it. If you bomb, uh, if you bomb a tanker with a flag on it, and there's a tugboat with a Saudi flag escorting it, you have some problems. Let's see. I found crude oil inventories on February 19th to be stark as inventories changed drastically to minus 9.1 with forecast 1.6. Yeah, right. That's it. That's right, George. So George is pointing out that we had a big draw on crude, even though it was expected to be a build. You had a draw of 9 million barrels, and there was supposed to be a build of 1.65, and that's because people were pulling it out to sea because they wanted it early. Right. Everyone's just taking care of their risk. Insurers will close the straits unintentionally or intentionally, depending on how you look at it. I agree. Uh, right now, Iran's in a bad place. Uh, Iran's in a bad place because the Saudis are cooperating with us. And that means that unless we do something really bad or really stupid, Iran is going to be isolated, and China suffers the most. If this becomes chronic, China, like right now, Trump is probably saying to himself, "I can end this now, or I can make this last." If he ends it now, I don't think he wants to end it now. I think he wants to let it run and keep. I think he wants to keep bombing. And I think he wants to keep bombing because he's sending a message, and the more he bombs, the longer the delay is for China getting their oil. And China really needs the oil more than we do. And their economy is always on the cusp of going into recession lately. So they're going to have to do another stimulus, a bazooka. Right, the Abraham Accords seem to be doing their thing. That's right. Uh, I remember you said that they're allowing gold to rise, but they need to keep oil low to prevent a repeat of the 70s. Well, all right, Chris, that's the calculus. What do I want more? Do I want oil down to prevent stagflation, or do I want to teach Chinese a lesson? You follow? So it's kind of like both. It's kind of like, okay, if oil stays up here for, let's say oil always opens up at $80, right? If oil stays up here at $80 for any length of time, it's going to really hurt, right? So it's going to be down to Trump's popularity. It's going to be down to gas prices at the pump. So what Trump's going to do is he wants to teach. This is my opinion, right? It's not a fact, but it's based on how they've done it in the past. Hold on, someone's coming in. I'm going to be ending and people are still be coming in. So the decision analysis for Trump is actually it's simple. It's not easy. So I believe he's saying, look, he's flexing on China right now. I mean, in a big way, guys. This is a big flex on China. He's saying to China, you can't have your oil. Let's see how long you can last without it, because I think I can last longer without it. Now, does he have an SPR? Can he release the SPR? Yeah, he can do that. Can he ask the Saudis to pump more? Yeah, he can do that. So if I'm Trump, basically it's all about the Saudis. The Saudis will keep pumping oil as long as we're defending them. And at some point, the Saudis will say, you know what? This has gone on too long. Would you please wrap this up? So at that point, it's a trade-off. You follow me, Chris? I think if you want to have a straight up answer, you're thinking through Trump's head. If his popularity downticks, the war's over. If popularity upticks, the war continues, right? That's how he operates. He wants to threaten China. China is hurting us with the rare earths. They really are. So we're hurting them with silver. We're hurting them with oil. We're hurting them with that shit. I mean, not to mention, I mean, listen, this is a huge flex because the more we blow up Iran, the longer it takes for them to come back online. The longer it takes for them to come back online. Look, when we invaded Iraq, or not when we rescued Iraq, actually, when we went into Iraq or rescued Kuwait and then invaded Iraq, the Colin Powell's statement was, if we break it, we buy it, right? If we break it, we buy it. And he turned out to be right in that. Well, this time we're pulling out. This time, if we break it, they buy it. They have to fix it up. That's the flex. The flex is, I'm going to blow up your backyard, one of your biggest oil producers, and then I'm going to say, go fuck yourself and walk away. Excuse my profanity. I'm going to say, go to hell and walk away. And that's basically it. So sorry if you have families listening. I won't curse anymore. So that's it, Chris. The calculus is, how long can I play this game? Probably ties really to his popularity. And if his popularity goes up, he'll play it. If his popularity goes down, he'll lose it. So the more soldiers die, the lower his popularity goes. You know the left is going to be all over this. They hate this, right? But the right is going to push back and say, look, this needed to be done. And so we'll see. So it depends on how the press handles it. I'm wondering how the press is going to handle it, because I'm seeing some reports of reporters actually telling the truth, in my opinion. Right. Well, Biden drew down the SPR, but the SPR was going to get drawn down anyway. He just drew down on it faster. All right, there's a lot of things coming in here. What must be by accident, Julian? No, actually, there's one guy who actually was told by CBS to. He went to the shooting in Austin, tragic, ridiculous shooting about by the I forget, it was like a Senegalese guy, illegal immigrant probably, wearing a I'm with Allah type of shirt, killed 3 people, injured 15. Well, and he had a Quran with him. Well, this CBS reporter was there to interview that, but there was a big group of people that were not protesting but praising Donald Trump for the war effort, because they believe we need to do this, and so the CBS reporter went to them to interview them because they were giving their side of the story, like, we need to do this. This is why we can't have terrorists in our country, et cetera, et cetera, et cetera. And the CBS reporter was told by his bosses to not interview them, and he said, "Sorry, I'm going to do it." So maybe let's see if that's an aberration. All right, you guys are having your own conversations now. Leon, hi. Journalists have an outsized and unrealistic opinion of their current relevance. Oh yeah, exactly. Well, they want to be relevant, so maybe that's why they're going to start interviewing people that matter. You know. Um, Holy shit, I'm at full capacity. I can only host 99 people. Oh no, I'm not. I'm at like 81 or 82. All right. Anyway, so rather than me, babble on, I'll just answer questions. Like, I'll give you here. I'll just tell you a story that happened in the first Iraqi war. Oil was trading. The first Iraqi war was basically us going in and pushing them back out of Kuwait. The first Iraqi war, oil was trading $29, which was ridiculously high back then, and I'm sorry, it was trading $22, give or take. And then the bombs dropped and oil spiked $7 to $29, which was at the time limit. They had a limit of $7 then. It was like, 25% or something like that. And It spiked to $29, but when the market opened, it came in under $22. And the reason that happened is because the US asked the Saudis to pump even more. And so the Saudis are doing that already. So you should assume that more oil will be pumped tomorrow. So if I were long oil, I'm telling you what I would do right now. If I were long oil, if I were long front month oil and the market were called 10% higher, I would immediately sell it and buy the next month out. I would stay long oil, but not the front month because I think the Saudis are going to hit spot next week. That's what's going to happen, I think, and that's why I'm careful about gold as well. Oh, they're trying to sell me more space. Okay. What question? You guys are talking about all kinds of shit now. So, anyone have any questions about the war or gold or oil?
Hey, Vince, you said earlier that you thought China may not open their markets this week. Is that
Yeah,
something you've heard? I
yeah,
hadn't read
yeah.
that.
Okay, well, from multiple places on social media, one very reliable, one who will say anything that's said to him, but the reliable one said that China has not all their markets, mind you. China has said this is why it's crazy. China, I don't have the message in front of me, but I put it on social media. I'll throw the thing in the chat. But China said due to the increased demand for gold, they shut it down over the weekend. So they have a market that trades over the weekend, but they shut it down, and they may be shutting down their futures and options exchanges, or at least delaying the opening of them tonight. So that's legitimate, and they can change their mind, but that's legitimate. They're talking about doing that. Abu Dhabi is going to keep their stock markets closed for 2 days. So March 2nd and March 3rd, they've announced that their stock market's going to be closed. So any area that's being bombed might close their markets. I think it's a very bad thing. Look, it's being spun. You know, you guys, hold on. Let me pause my recording here for a second. Uh, No, I don't have any. I don't have any defense stocks. I'm very narrow. I go narrow and deep. I go what I know. Every time I get outside of what I know, what I have found out, Johnny, as a trader, I know what I know, right? And I'm not scared to know other things. Like I don't know defense stocks. I'm not going to pretend I know them, but I know miners. I don't know them as well as I know physical, right? I know miners. I know oil. I know oil probably as well as gold. But what I'm not good at, what I'm really not good at, and believe me, this is years of doing it the wrong way. I'm not good at multitasking. Okay, so when you're a portfolio manager is like a Druckenmiller. They're looking at 5 different positions, and they need to look at all 5 different positions individually. So, for example, Druckenmiller, let's say he's long Newmont and he's short Exxon. And his reason for being long Newmont is he's bullish gold. And his reason for being short Exxon is the management sucks. Let's pretend that's his reason, right? Okay. Now there's a war and both of them go up. He's going to be able to separate those two and go, all right, this is good. I'm not worried about Exxon because I think the management still sucks. The war is going to hurt me, but I can live with this. I can't do that. I would take the positions and put them together and say, shit, I'm not making any money. And I would close down my shorts. So defense stocks, if I knew anything about them and I don't, will distract me. Like I know something about nuclear stocks. I know something about nuclear stocks and they distract me. I had Oklo, which did well, and I had a couple others that didn't do well. And I wasn't patient enough because look, when you have most of your eggs in one basket, and that basket being precious metals, so you've got 80% of your eggs in a precious metals basket, and you're watching it. I like to hyper focus, and then you say, I think I'll put up something in nuclear or defense, and you do that, and then it goes against me. And what I find is I get distracted by that, and I can't focus on what matters. So I have to get out of the thing that distracts me. So I, 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 there are two ways to invest. One is to put all your eggs in one basket and watch the hell out of that basket, and the other is to diversify. Traders put all their eggs in one basket, and Druckenmiller can put all his eggs in five baskets at the same time. I will say gold and oil, gold and oil, gold and oil. And I'll trade, soybeans. I traded, like last week, here's one for you. Last week, soybeans went above $11. I said, okay, it broke out on a system that I have. I bought it. It went up. And then my silver position started losing money. For a couple of days, I had one of those down days. I'm like, we go below $70, I'm going to get screwed, right? So what did I do? I closed my soybeans because it was a distraction. And then soybeans went up another dollar. But now they're backing off. So here's another one for you. Here's another one for you. Oil. When oil broke $66, you heard me talking about it. I got long oil. I got long oil above $66. Very disciplined. I had a system. I had a level. I got in. A Bollinger Band signal. I got in. It went to 66.80. You probably heard me say in the morning meeting, oil's comfortably above $66 now. That was me talking about my position. The next day, oil goes back down below $66. I go, shit, I get out because it's below my level. And then, of course, the next day it rallies, 2%. And now we're trading $67 before the war. But I stopped myself out because I don't have the bandwidth to multitask. Does that give you the long version, Johnny?
Yeah, for sure. I definitely understand. There's a particular structure to it, especially being a PM.
Yeah, exactly. Right. You understand, Tom. It's a matter of style. How does the war change my outlook on miners? I got to tell you, there are going to be two narratives out there, Chris. You brought this up before, and I'll bring it up as well. I think there are going to be competing narratives out there now. One is, in the short term, this is bullish for miners. In the intermediate term, this is bearish for miners. And in the long term, this is bullish for stagflation or inflation, which will be good for miners. So I feel like miners should be higher tomorrow, unless stocks pull them down. Put it this way, miners should be down less than the rest of the stock market. You follow me? I don't think they're going to be down more than the rest of the stock market. They should be up, but I think they'll just be down less than the stock market if in worst case scenario. My outlook on miners, the long-term outlook, Chris, I'm even more bullish longer term now. So in the short term, I'm bullish miners. In the intermediate term, I think you're going to start seeing some problems if energy stays up here. If energy's up here, if energy's trading $80, $90 a month from now, you'll start seeing some problems. But if gold's trading 5,500, then your risk is offset. At least some of it is. You follow? But longer term, now mind you, I'm buying miners now. I said, I've been threatening to give you a list of names, but I'm not an expert in that. So what I did was I bought SILJ. I bought a lot of SILJ for me. And I'm still underinvested. It's a 5-year hold for me. Is SILJ going to be my only holding? No. I bought that because I haven't decided which miners yet. So at any point in the storm, I threw my money in SILJ because let's face it, I had that Condor position on. And as the market goes higher, my profits start to go away. And so as the market's going higher, I bought some calls, I bought some SILJ, I bought some calls, I bought some SILJ. So I'm getting greedy as I'm doing this. But I'm really underinvested, Chris. I have another 75% to buy. So I'm going to buy a dip. I'm personally going to buy a dip. I'm not going to sell it if it goes down. That's all I can tell you from my perspective. Short-term bullish, intermediate term, definitely some headwinds from energy, and longer term, just bullish. Does that help a little bit?
Very helpful.
Yeah. Do I have a preview on my AG stock? I don't have a preview on the silver stock choices, but I'll tell you exactly what I'm. Look, I'm not a guru in this stuff, okay? But I know a lot of people who say they're gurus who aren't shit. But I'm gonna tell you what I'm looking for. I'm looking for miners. I'm a fundamental analyst. At one point, I was a fundamental analyst. So I'm looking for miners that have brownfields, that are undercapitalized, but have good geologists. So I'm looking for miners that would benefit if the government invested in them. And for me, that's like the miner that was in, what's the name of that miner that Samsung just invested in? that miner is the type of miner I want to buy. They have proven reserves. They needed money. They have a lot of their operations shuttered, and with money they can open up again. Look at the miner that Samsung bought. That's the miner I want to buy. If I can find those miners, I want those. Those are miners with good management, with equipment that's ready, that just need some capital to get running again. Or, they're already running and they're positive cash flow, but they're not really, they're small miners that can scale bigger, but they don't have the working capital right now. That's my category. Now, I'm going to be having a conversation uh, with with Robert, CEO Robert Sin, CEO technician tomorrow. No, not tomorrow, probably Wednesday. And he and I are going to start talking about this more openly. And so you'll start to see the thesis come to life as I do it. If I do it matter. Does the country matter? Yeah, it does matter. It does matter. Uh, when you say does the country matter, do you mean does the country matter where they operate, or does the country matter where they're listed, like Toronto Stock Exchange versus? I'm missing a lot of messages here. My choice. Got it. Got it. Um, I want to. If I had to buy one type of miner, it will be an American miner. That an American company that has operations in Latin America. Because if you're an American company with operations in Latin America, I don't think anyone's going to mess with you. I mean, the cartel could mess with them, but I don't think, like, Barrick got messed with because they're a Canadian company. I'm sorry to say that, but it's true. American companies are going to get protected. Sibanye, is that how you say the name? They went to America looking for partnership in that respect. So the BBC claims Iran is closing the strait. There you go. Wow. Well, they're just pissing off China. They're pissing off everyone. But if they were to do that, I think the Saudis. I mean, in the past, this is from Peter Butel. Remember, in the past, he said if the if the if he used to say Persia, if Iran closes the strait, they affect everyone, not just them, and the Saudis will just declare war on them. And then it could be a really big shit show. And that's your black swan. I'm talking about black swans now. People say, well, that's not a black swan. There's a war we knew was coming. No, the black swans, we don't know what's going to happen. The Saudis could declare war on Iran. They could do that. I mean, it's well within their means to do that because you're messing with. Look, the Saudis are the mafia. Forget the religion. They're just the mafia. Uh,
But sure,
okay.
if they're
Why?
closing, can they choose which ship to go through? Like for
They
Iran.
they, they can they can, but it won't work. It becomes you can't. It's like it's not like anything. It is what it is. Uh, if they let their ships through and not someone else's ships, let's put it this way: I'm the Saudis and you're Iran, and in between us is the water. You're going to let your ship go through and stop mine? No way. No way. That's war. I mean, they're literally taking food out of the Saudis' mouths. There's either you close all of it or you close none of it. Now, how do they close it? Could they mine it? Yeah, they could mine it, but maybe we'll probably we have guns that will just probably blow them off the map if they're really closing it. I mean, I'm talking out of my ass right now, but I'm just going with what Peter taught me years ago. Uh,
Hmm.
what did I miss? Somebody asked something that I wanted to say. Yeah, there was a rumor of a false flag already that there was a ship that was burning, but it was one of their ships attacked by them that was tied up. So, does anybody have anything about the BBC? I'll open it up now. Damn it, it keeps moving. Oh, three ships. Oh shit. And that's why oil's up 15% now. There you go. So whoever gave me the IG data, it's right. All right, so here we go. At least three ships have been attacked near the Strait of Hormuz as Iran continues to launch strikes across the Middle East in response to an ongoing attack against it by the U.S. and Israel. Two vessels have been struck, and an unknown projectile is reported to have exploded in very close proximity to a third, the UK Maritime Trade Operations Center, UKMTO, said. Iran has warned ships not to pass through the strait, which carries about 20% of the world's oil and gas. International shipping has almost come to a standstill at the strait's entrance, with fears of disruption already pushing up global oil prices. They don't have to shut the strait. The strait's shutting itself because nobody wants to go into there. Iran's Islamic Revolutionary Guard said three tankers from the UK and US had been struck by missiles and are burning. Hold on, let me get my social media open here and see what's going on.
Should we get some physical now, guys? Is that a bad time?
Physical gold.
Yeah, both. Those silver.
Well, I thought maybe you're going to take delivery of a barrel of oil. My opinion, not a good time.
Yeah, interesting. Okay.
Not a good time to be long, but the dealers are going to start. It's the premiums that are going to explode on you. You follow? If the premiums are high, then the answer is no. It's all about the premiums now. If they try to rake us over the coals, you don't do it. But I've got good prices if you have a hard time finding them. Hold on. So all right, so we blew up the IGRC headquarters. I don't see BBC's reporting it. A military base has been struck. Robert De Niro could go to jail. I'm sorry, that's on my feed. Okay, so based on here, I'll make this bigger so you can see it a little bit. So here we go. The vessels have taken a precautionary measure not to enter as the risks are too high and their insurance costs have skyrocketed. Right. It's not worth your life. It's not worth your life. They're just going to stay out there and go, no, I'm not going in until I get escorted by someone. He said the U.S. would likely try to protect shipping routes, which, if effective, would prevent an oil price spike. But if the strait remains shut for a long period, prices could go much. The strait doesn't have to be shut for a long period, guys. It only has to be shut for one day, and you'll have a 20% rise in oil. The strait's not even shut and oil's up 15%. That's the point. You can pump all the SPR oil you want, but all that oil that's floating on the seas right now, it's spoken for. There's no way you can make oil go back down from this unless the Saudis keep pumping. And if the Saudis keep pumping, that's fine. But if it can't leave the strait, then that's another problem. Here, I'll show you. I'll show you what Peter used to tell me. All right. See this little island here? This island is part of Iran. And this island is where they have their military bases. And they have guns. I can't believe that they haven't been, if they've been blown up, they can't really do anything. I'm almost getting the impression that Iran is getting desperate. Maybe they're on the end. Maybe it's near the end. I don't know. Anyway, excuse me. I have a cold. Anyone else have any other questions? Where's the chat? Pater Prospector. I'm likely correct on what, Leon? That Iran is on their last legs, like they're getting a little desperate.
But surely the Chinese or the Russians won't allow that, right?
Look, China is not going to be happy. Like
Yeah.
China is always on the cusp of a recession now. They're not going to be happy about this.
Right.
They need oil to come in so they can keep their factories that are open, making things that people aren't buying, and give the impression that things are going well over there. And I'm not anti-China, but I'm telling you, like their economy, like they have like a 40% youth unemployment rate or something like that. So that's a command economy. And I got to tell you, if I was China, I would shut the gold market too, because you know what? I don't want people thinking, I don't want my people seeing gold go up. It'll make them nervous and they'll buy more because the Chinese with precious metals right now are in a very FOMO mode.
Vince,
Yeah. Yeah.
Vince, if oil is going up 15%, what will gold do tomorrow?
Gold should not outperform oil. Okay? It should not. So less than 15%. That's all I can say to you. Gold should not outperform oil. Could it? Yeah, but I wouldn't. Look, if oil should be up, if oil's up 15%, gold should be up less than 15%, less than 10%. Let's see where it is right now. It's does that answer your question at least?
Yes.
Gold is there. Oil is needed. These people are panicking right now. I mean, look, I own a factory. If I don't get it's not even just the oil. It's not just oil that comes out of the strait. Diesel comes out of the strait. Iran has refineries in the strait, and those refineries make diesel. Finished products come out of the strait. It's not the raw oil, it's the diesel. And if you don't have the diesel, you can't run your economy. So the refineries are key. And that's, by the way, you blow up a refinery, it's over. I'm gonna pull up Tether. So look, here's what happened, right? Tether Gold, which is probably not a bad, like here, PAX is higher, right? PAX is, but they're converging. That's kind of good. All right, so I'm gonna leave PAX up there. So here's where we closed Friday. Here's Monday, spikes up to 5,600. That's ridiculous, but it did, right? On PAX because some grandma or grandpa bought one lot. And now it's still up. And now it's up. So from 52.90, it's up $110. So how much is that? 2%? It's not going to be up 15%. Gold's not the problem. Oil is the problem right now. And gold will be marked. The expression you hear me say is gold will be marked up with oil. But oil is the crisis right now. This is an oil market. I mean, I don't know how they're going to keep oil down. I don't care how much they pump on the SPR. You can't pump diesel. You need diesel. You need products. You need gas oil. You need heating oil. You can't just pump those. They have to go through that strait, and that's where all the refineries are. It's 3:24. I could keep talking, and I know you guys know I could keep talking, but I didn't anticipate having this big of a group. But I'm happy about it. But I will do something like this next week. But we'll have more structure, and I'll answer a couple more questions. Then I have to go.
You're just famous, Vince.
Yeah. Well, the markets make you famous, Johnny.
Hey,
Right?
Vince, it's Iggy. Real quick comment. This is the
Sure.
biggest weekend, or event pretty much since 9/11. So I'm not shocked that everybody has questions and concerns, right?
Yeah. I want to answer as many as I can. Have I made a decision versus Substack versus Slack posting idea yet? Yeah, you know what? I know Slack is better. Even WhatsApp is better. But I haven't made a decision yet because, well, I have made a decision. The decision is I'm not going to do Slack for a while. I'm not going to do anything like Discord or Slack for a while because I think I need to focus on getting this guy that I have working for me trained properly before I start giving him a responsibility for that. Like I have people that are having problems logging in, and I haven't gotten back to them enough yet. And I can't do it anymore. I need to have this kid do it, and he's not trained on it yet. So I can't, it'd be too much for me to bite off. Substack does not work well for chat. I agree.
Vince, it's Iggy. If you decide that you want to do an alternative like Discord, come talk to me first because I have some things we can talk about.
Okay, good. Thank you. I will. Yeah, a couple people have offered to help me set up a chat on a website, and Discord is the best for community management. I know from when I did my gaming. I was I don't know if you guys are familiar with the game Age of Empires. It was a very popular game for a while, and it's not a real time game. It's more of a take turns game. And I was on I was honored to be on the one of the official American teams. We were like in the top 5 in the world, and I was on that. I mean, I was good. I wasn't great, but I was good. But they liked me because I would always give everyone gems. I would buy everyone gems. Basically, I paid my way into it, because I wasn't good enough. But I was really good with goblins and the balloons. So anyway, one platform is easy for now, I guess. Slack is better than Discord now. Okay, right, Henry? So I'm playing Age of Empires, and I'm playing it until one night I get a text on my phone, and it says I just bought $100 in gems, and I'm like, what the hell's that? Well, it's my 6-year-old kid using my account, buying $100 in gems. And so I stopped playing it. And then I came back a couple years later. And then he started playing Age of Kings, the short-term stuff. How long do I think the price of oil will remain higher price? Oh, well, that's a tough question to answer. But I can't give you the price target, but I can give you the path. Right, Louis or Luis? Oil's going to do this tomorrow, more or less. It's going to do that, right? So it's all going to go up, but it's going to get really steep. And if it stays really steep for the next 30 days, then the whole curve's going to start moving up. So I think oil could stay between $80 and $100 for the next 30 days. If it stays above $80 for the next 30 days and we don't get it down, then it's going to stay above $80 out here for the next 90 days. And then it becomes a problem for everyone. Right now, it's a problem for 2 people, China and, I don't know, China's got to get more oil from Russia, I guess. I don't know how that works, but yeah, buy quiet, sell out. Is it going to start to sell off on the indices, that Mike Oliver? Well, Scott, it could be this. That's a fair question to ask. Interestingly enough, I'm not sure if you saw the post that I put out, but Michael Oliver is bearish on the financials because the financials are cracking his technical levels. And Michael Hartnett's bearish on the financials too because he sees the credit market deteriorating beyond being fixable. So this could be the catalyst to get it going. Yeah, the straw that broke the market's back. I think there's a good chance of that. How does the situation affect Europe and the war in Ukraine? A lot of these questions, I'm going to tell you if I don't know the answer. I'm not going to make shit up and just say, oh, well, this is definitely going to happen because people just want to be confident. That doesn't help anyone. I'm going to try and give you the right answers here. How does the situation affect Europe and the war in Ukraine? Well, it hurts Europe because Europe is dependent on diesel. Because the diesel that's not coming out of the strait, if the strait's closed, that's not going to China. Well, China's out there buying everyone else's diesel. So everyone who hasn't prepared, doesn't have a supply chain ready for them, is messed up. That's why we invaded Venezuela, when you think about it. Yeah. It's Pac-Man, Jake? Come on. I was never really good at Miss Pac-Man, but it was a great game. I used to play Galaga or Galaxian. That was my game. You used to run Wargamer, Jim?
Yeah, I was the editor in chief.
Oh, that's awesome.
Yeah,
That's awesome.
before it became what it is now. Yeah, so we would do like war and strategy games.
Yeah,
you know.
yeah.
Rome
You know what I'm
total
talking
war.
about though, with the Age of Empires, with
Oh
the
yeah, yeah.
I
I
was
had a
like,
team of about 50 writers who would go on about that stuff. Yeah, it was
Oh, that's
cool.
cool, man. That's great.
that's really cool, Jim. That's I'm
There's some
honored
cool
to be.
people in this little group, man. That's
We did.
cool.
I mean, Wargamer. That's really like that's awesome. That's awesome.
It's no longer what it was.
Yeah,
It's still a pretty good site, but it's not what it used to be.
yeah, that's awesome. That's great.
Yeah.
We are blessed to have you here. That's great. Yeah, we got some
Oh
good people.
no. Well, I am blessed to be here with you. You are
Oh,
the
here we go.
master.
Here we go.
I-
The Mutual Admiration Society.
Yeah, I hate to give you praise, but man, you know what the hell you're doing.
Sometimes. Uh, Avalon Hill. I don't know that
Yeah,
game.
Avalon Hill. Yeah, yeah, that's yeah.
Mearsheimer and Sachs are shills, are knowledgeable. Julian, Mearsheimer is a shill. He is totally a shill. But he's knowledgeable. So you have to listen to him. Sachs is a shill too, but I don't know for who. Um,
Yeah, they both really know their stuff on the geopolitical side, but if you listen to them for any length of time, you
right,
kind of know what they're going to say, and it's normally going to be anti-US and pro-Russian.
right.
Um,
Right,
so that's
Mearsheimer, like the very first time I heard Mearsheimer, I was like, because the very first time I paid attention to him was when the Ukraine Russia war started, and his spiel was uh, Ukraine's going to be a rump state, Ukraine's going to be a failed state, and I looked at his analysis and I went, yeah, that makes sense. It's going to be a DMZ. It's going to be a dead area. It's going to be like it's going to function like a dead zone between Europe and Russia. And I went, that's really good. And then every time I came back to him to watch something else, it was always Russia is cool, U.S. bad. Russia is cool, U.S. bad. And I'm like, I felt like I was listening to Pedro Escobar, you know? So I stopped watching him. Sachs, I don't pay attention to. Sachs is like that as well.
he's knowledgeable. But I mean, for me personally, I like to listen to them so I can get a perspective, but I take what they say with a pinch of salt. And to be honest with
Right.
Deason, I just got a little bit bored of the whining. It's like you listen to some of his guests and they just incessantly whine, and the language just gets really wearing. That's my opinion anyway. So
Right. All right, cool. All right. Bill, that's very kind. I am the confluence of many skill sets. I am the jack of all trades, master of none. I think that's an insult. I'm just kidding. Thank you. Thank you. All right. I do want to stay on here, but I can't. I do have to go. Look, I'm not even wearing a turtleneck today, so you know I have somewhere else to go. Um, so thank you for your patience. Hopefully I got to some of the questions that mattered the most. We're not walking out of here with any easy answers, but oil gets above $100. Put it this way, oil doesn't get above $100 without Trump stopping the war. That's my thoughts. And he'll keep it as high as he can for as long as he can, as long as his popularity is up. So that's it. Yeah, Sachs is a left-wing warmonger. Isn't it funny the neocons really were Democrats at one time too? All right. All right, thanks guys. Hopefully this has been some help to you. I got to go. I'm going to leave it open. All right? I'll just leave it open. Let me just get everyone in here that's in.
Hey, Vince, did you say you were going to shut it down and then reopen it or something earlier?
I did say that, but I'm not going to do that. Let me stop recording
Okay.
it. Let me stop recording first.
Sounds like we're going to have some spirited discussions afterwards. There's a
Exactly.
lot of...
It's I don't want to stop the continuity. So
No,
all right,
it's good. Diversity of opinion is good.
yeah, exactly. So I don't want to cut it short. So what I do want to do is, Iggy, I want to open the all right, first of all, I did this last time successfully. I need to figure out how to do it again. I need to
Any last second thoughts on Bitcoin, Vince?
You know, I sold half my position at 75,000 and I'm still sucking on the other half and I'm not buying a dip. So I'm probably not the other person. I'm probably not the person to talk to. But one thing I did say that I feel strongly about is that Bitcoin is viewed as a dollar hedged. I'm sorry. by the rest of the world, Bitcoin is viewed as a dollar proxy now because of what we've done to it. I think if I'm Chinese, I'm not going to put money into Bitcoin. I view it as an American brand now, but that's not very helpful. Uh, Notes, whiteboard, apps, meeting info. No, that's not it. All right, so I want to go into the participants. Oh, there it is. I found it. If you want to unenable a waiting room, you go, anyone who has this set up, you go into, because I know some people said they're not familiar with it. You go into the chat, and at the bottom right-hand side, there's these three dots. You click on the three dots, and there's a check mark box of enable waiting room, unenable it. So the waiting room has been turned off, and now I'm going to make sure that everyone can share screens, right? We want to do that. Everyone can share now, but it's only one at a time. And Iggy, you don't have to worry about the waiting room. Do you want to be the host?
Yeah, I'm happy. I'm happy to be the host. But what they posted earlier, I don't have one of those premium business accounts, so I won't be in the running for helping, moderate stuff as a co-host. Is that if that makes sense? I'm not sure if you understood that earlier.
No, you don't have to do anything. You don't have to do anything.
Yeah, it's fine. I'll stick around.
I mean, as long as I know that you're going to quarterback a lot of this, and I think that's really cool, and I appreciate that, and I'm grateful for it. So I'm going to make you the host. The only thing it gives Iggy the power to do, he's not going to like be a sergeant at arms, but if he's sharing, you can't share. So if he's sharing his screen, he has to stop sharing so you guys can share. Other than that, it's going to be a free for all. All right. So I'm gonna do it right now, Iggy. Iggy phone, right? You're not in here more than one thing, right?
I'm on Iggy. Actually, no, do Iggy computer so that I can share on that, I think.
Yeah,
The phone is just so I can talk because I don't have a microphone at my desk.
Okay, so let me find Iggy. Let me find Iggy computer.
It's Ignatius Albright.
Got it. Got it. Got it. Well, I found you, but I didn't find you in the pictures. All right, you're not there.
I just unmuted it so that you can maybe see the unmuted account at the top.
There it is. Thank you. Good move. All right, you should be the host now.
You may also want to stop recording if you haven't.
Oh, I've stopped. I did stop, didn't I? Yeah, I did. I stopped. Hold on. Don't say anything, guys.
It's still recording.
Oh, hey, Iggy, you have to stop recording. Do you know how to do that?
No, but
I'll do it. I'll take it back. You have to make me the host now, or stop recording.
Host tools.
Find my picture. Go on my picture, and right click on it, and make me the host.
Make host. Here we go. You should be host again.
All right. So let's see. No, I'm not. I'm not. You're still host.
I just clicked from the three symbols, make host again, and I just did it a third time. So hopefully you're host now.
No, I'm not. I'm not. You need to go into my picture.
Yeah, I'm in your picture, and then there's a mute for you, and then there's an ellipsis, 3 dots. I click on the 3 dots, and then I click make host.
And it made me host?
I can't answer that part.
It should have. Let me see. No, I can't. Are we still recording, guys?
Oh, you know what? Here.